Welcome to Coleman Report Live. I'm Bob Coleman. We're talking Main Street and the small business lenders who help it grow. I guess I'm lagging a little bit. I apologize. We tried to do something, so my audio is fine. Lance, if I'm just...
It's okay, Bob.
I'm too...
When my wife and I are streaming a movie, Bob, when it lags like that and the voice and the mouth don't match up, she says, "We're not watching that."
No. Not watching. And look at that. I have all sorts of issues. There we go. Huh? I look better. Delaney, good to see you. Are you through with West Texas? You coming home soon?
Yes, I will be coming home this weekend, and I'll return back to Arkansas.
Just our world traveler. Hey, let's get into it. Number one, do you have a borrower who is eligible for forgiveness but refuses to submit paperwork? Lance, this is for you.
Bob, I think there's going to be 100%. I mean, I'm going to be blown away if it's not 100% yes. Now, you can lump the 19% in with the 60. I'm not surprised. I think that the 2020 borrowers, I'd love to know what percentage everyone's at in forgiveness. We're in the low 90s, and I think most people are about the same place. But coaxing some of the borrowers to apply for forgiveness has become quite a challenge, some of those stragglers.
What's the common reason people don't want to do it?
Bob, some of them forgot about it. It's okay. The craziest thing. I have phone conversations with Bob. First of all, everyone on this show probably thinks I love to talk, but Delaney knows that I don't necessarily love to talk a lot. And I'm getting 60 or 70 phone calls a day from people about forgiveness. And I talked to one guy. He forgot he got a PPP loan. I'm like, yes, you did, and you need to apply for forgiveness, or we're going to be asking for payments. So
when those payments hit, that's when you're going to get a bunch of phone calls.
The funny thing is the 2021 borrowers, now that the direct forgiveness portal's open, they don't seem to have the same hesitancy to apply for forgiveness that some of the 2020 borrowers.
2020. So I guess the question is, what do we do? We just have a borrower who just says, I don't want to do it. Good luck, Lance. We're actually gonna have a conversation with our team next week, and we're gonna assign a few team members to take our 2020 list and go back and reach out to them one more time. And the thing for the borrowers that we need to, once they apply and the forgiveness application is submitted to SBA, the loan's still deferred at that point. Right.
So, if you have an April borrower and you assume the normal covered period and the 10-month deferment, those people should be getting payment notices either this month or next month. But as long as they get their forgiveness application submitted, it's still deferred until its decision.
Well, I think they can, and I agree with you. I think they can stand on principle until all of a sudden they start getting the payment coupons and you call up and say, hey, you want that to go away? I have a solution.
Well, we're trying to make them aware that, not next week, not next month. Now is the time. So we're actually we've got a spreadsheet with all of our April, May, June, July 2020 borrowers, and we're going to have a conversation with them about how you need to get your application in.
All right, before we ask the second poll question, Delaney, I want to do a fact check. Is it really true Mr. Sexton does not like to speak?
I would have to disagree, but I'm sure he did not want to hear that. So
just keeping it real, Lance.
Bob, as long as we're talking about SBA and entrepreneurship and small business, I talk too much. But there are other things I'm not real conversational about.
Number two, do you anticipate an influx of 7A loan apps before the fiscal year 9/30 closing date? Yeah, and that tends to be consistent. I don't have an answer for that other than who's pushing this, Lance? The borrowers? I assume it's really the lenders who are pushing to get these done.
Well, and there's really not been any media coverage of the fact that the guarantee fee waiver goes away.
Mm-hmm.
After 9/30, there's been zero discussion about it being extended. So I think that there'll be a rush of applications because lenders know if they want their borrower to be able to take advantage of that, they need to get it in and close it before the end of the fiscal year.
I was going to say, Lance, what exactly do we need to do? We need to have close it, fund it. Do we need an approval number, or are we working off the application date? What is the thing that triggers?
On the guarantee fee, you're going to need to have your approval number.
That's all you can close in October. You just need that approval by now.
Because the guarantee fee is determined once you get your number from SBA, and it's due shortly thereafter. But you're going to have to at least have it put into the system and have an approval number.
Last question I want to know, is anybody in your institution processing a 504 refinance debt loan?
I have to believe, Bob, there'll be quite a few that are.
Yeah. Ooh, interesting. Interesting. I thought that would be obviously higher, Lance. Where did we go wrong? I would have said 2/3 yes.
Well, I think the release of the 504 refi rules is so new that, not everybody's been able to jump on board. And quite frankly, I think most SBA shops are running so hard with 7A applications, PPP forgiveness, right, that sometimes you get to the end of the day and you're asking yourself, what new should I be doing? And right, 504 debt refinance is one of those things you should think about.
Lance and I are big fans of that. Take advantage of it. It's good for your borrower. It's a good loan for your institution. So when the dust settles a little bit, make sure you understand that as a great option. Let's set this up, Delaney. I want to bring you in for this conversation. These are allegations from Newtek in a lawsuit against Carrie and BankServe. And I understand I've been mispronouncing Carrie Agee. What is the actual, is Agee? Is that?
I think it's Agee. I've kind of heard both. So throughout the courtroom, they said Agee though.
Agee, okay. Carrie. So I'm going to set up, these are allegations. So go ahead, Delaney. What did Newtek allege in a civil lawsuit?
So this situation was very interesting because it was a legal battle, and Carrie ended up suing Newtek as well prior to this.
Yeah.
But there was kind of an argument about whether or not she resigned or whether Newtek fired her. But after she got indicted and started falling into some legal trouble and bankruptcy, they decided to file a lawsuit. They claimed that the sale of BankServe to Newtek was fraudulent. Agee was hiding certain facts. For example, in this first point here, I believe it was $801,000 in liabilities that she never informed them. And she was selling them because Agee and BankServe were into some financial issues. She had a loan, a $700,000 loan that she was in default for. So she wanted to be paid up front.
Yeah, well, let's go back to the first point. What that is the loan service provider was taking the payments from the borrower, holding them for 30 days, and then forwarding to the fiscal transfer agent, which at the time was permissible. Obviously, because of these allegations of the shortage of that fund up to $800,000, SBA will no longer allow that the payments have to go directly to the lender. This was not in any criminal indictments, so honestly, if it was that serious, she would have been charged with that. But this is, I think it's safely to say this is what Newtek alleges. And Lance, you don't have to comment on this. You can just nod your head. But we've heard this for years out of BankServe.
Yeah, and Bob, when I worked for a lender service provider, I'll just tell you my experience there. I was chief operating officer, and one of the first things that I discussed with my friend Chuck, we worked together. I said, Chuck, we're not going to collect payments for the banks.
No.
We want the payments to go directly to the bank. That takes away any potential issues with how long the money sat there. And I didn't even know about the Carrie AG Bank Serve thing at that time. I just, from a perspective of being a bank, we wanted the payments to go directly to the bank.
I have, I can report this directly. I've received a number of emails on our reporting. I haven't had one person defend her. I've had a lot of told you so type of emails, but if you feel, obviously I'm not going to quote you, but if you think she was wrong, send me an email. But I've got a lot of emails that say we knew this was going on, and that's interesting. What else happened, Delaney? That she approved $200,000 in employee bonuses that New Tech frowned upon?
Yes, I couldn't figure out exactly what these employee bonuses were for. There's been some rumors, but I'm not going to get into that. But yeah, so New Tech did not approve of that. And then also, I want to bring this up because I thought this was very interesting. During the trial, I don't think this was ever mentioned, but there were certain lenders who have tried to sue AG and BankServe, and a lot of those, nothing came of it. But in one of these situations, BankServe had to start providing free services to one of their clients, which once again, New Tech was not informed of this. So I believe it was roughly around $100,000 to $200,000 or something along those lines of how much in service they had to provide to this bank.
In the transaction, which was about $5 million, part of the transaction, Delaney and Lance, was that Carrie had personally guaranteed the lease on the building. I've been in that building. I think we've run it. It's a beautiful building. And that was not part of the transaction of removing her liability. And New Tech stopped paying, and so that's one of the reasons Carrie sued there. Carrie said, hey, I didn't get my, they stopped paying the rent, and I didn't get my normal business expenses that I charged that I should have been reimbursed for. So that was in there. Car leases for AG and family members, and federal and state tax liabilities of $8,000. Now we're really getting to the bottom of the barrel on that. But of course, the repair and denial liabilities as high as $3 million. That's a significant red flag, Lance, and
yes,
that should have been picked up in due diligence, I would think.
Oh, there's no doubt about that. Repair and denial liabilities. Well, I don't know that those were on Carrie and BankServe, but those were on banks.
Well,
that they work for.
Yeah, but I assume then if I have a loan service provider and they're taking care of it, and all of a sudden I get a denial
liability,
I'm going to turn that over to my attorney. The first person the attorney is going to sue is the loan service provider.
Yeah.
So
yeah.
That's what that was. Hey, okay, so great recap. Let's move on. What did Mr. McMillan do, Delaney?
So this was a former loan officer of Chatham County Bank, and he ended up taking out a $187,000 loan in a victim's name. Of course, the victim was not aware. And even after that, he continued to renew applications to get more loans. As you see, $160,000, $157,000, $250,000. And so he was charged guilty, and he faces up to 30 years in prison and $1 million in fine, or $1 million in fines.
That amount of money, probably get him 6 months.
Yeah.
Yeah, I'll be interested to see how this finishes up.
But again, this consistent, smartest person in the room gets away with it once and says, and I'm sure the psychologist says, oh, I'm only going to do it once. I'm only going to do it once. Well, then they saw how easy it was, and they do it 2-3 times. So it's
well, Bob, and we talk about small business owners who have bookkeepers who consistently steal from them. You know, they do it once. You know, maybe they have a Visa bill they need to pay. They get away with it once, and then they just keep doing it over and over again.
Let's skip to the fintech CEO. Yesterday we talked about fraud in fintechs in the context that SBA wants to open up 7(a) licenses to fintechs. And Mr. I don't have his name here, but we got the obligatory Mercedes. He opted for the Mercedes at the Lamborghini. Rolex watches. I don't mean who wears watches these days. The diamond engagement ring. Okay, fine. I assume that was for a gift for someone. But what did this gentleman do?
So he obtained $7 million in PPP and EIDL loans. I think it was about a 350 split between the two. He also obtained a lot of investments through false and misleading statements, and it seems like a lot of these fraud cases hide things in their statements. And then,
I'm sorry, go ahead, finish up, Delaney.
Oh, and then due diligence fees from dozens of startups as part of an advanced fee scheme.
Yeah, this was Mr. Chang, 25 years old.
Really young.
Yeah, Taiwanese national. Lance, what I enjoyed about enjoyed, that's wrong term. I was intrigued. In his list of employees, he had a actor, a active NFL player, and a prominent deceased Penn State coach, football coach.
Oh goodness! So Joe Paterno worked for this guy.
I guess he ran out of. He was watching the news. Oh, what was it? Wasn't one of them an anchor also? Anyway.
Yes.
I guess he's watching the news and go, oh, I just wrote them all down. Again, these are for PPP1, and I'm very curious. Other people have said, I haven't seen any PPP2 fraud yet, and my gut tells me that that's going to be significantly reduced. But Lance, what's your opinion about that?
I don't think that the number of fraud cases, the number of cases will be reduced. In fact, I think they may actually be more, but it's going to be smaller. It's going to be smaller, Bob, and nobody's going to want to report about, someone who got a $2,350 PPP loan fraudulently. They want to.
It's not as flashy.
So I think there's fraud in it. I think the dollar amounts will probably mirror the 2020 stuff. It's going to be a very low percentage of the overall money that goes out, but the number of total cases will probably.
Yeah, you're right. The one across my desk was $94,000, and you're right. And I didn't even bring it up.
Well, the one thing I want to encourage everybody that's going through PPP forgiveness. I've now had a few guaranteed purchase requests submitted. SBA is doing an amazing job, Bob, of processing those. We're getting paid in 2 or 3 days as long as you submit the proper information. So it, the first one I did, I reported on a few days ago and told everybody how well it worked. Well, I've done others since then, and SBA is doing a pretty efficient job of processing guaranteed purchase requests on PPP loans.
Let's leave the conversation with this question. Should a lender reserve for PPP guarantee denials in their loan loss reserve?
The answer is there will be some where it may get denied, but basically SBA is asking for a very limited amount of information, and if you provide it's not the same level of due diligence as a regular 7(a) loan, Bob. So that's a tough question. I would say I don't, even if you did reserve, it's not going to take very much, because I think SBA is going to, as long as you can produce a documentation, SBA, I think, will pay the guarantee.
I think it's prudent to do a reserve. It certainly doesn't have to be a lot, but I think you should have some type of reserve. Obviously, they're going to want to back that up with some documentation where you feel that's appropriate. Joseph, why don't you make a note? Let's talk about that. in the future, but that's where we are. Hey, everyone, we got 2 great webinars coming up on projections and completing the credit memo over $350,000 in the next 2 weeks. Please be sure to take advantage of that. And everyone, have a nice weekend. And thank you for joining us today for Coleman Report Live and for supporting America's Main Street, one entrepreneur at a time.
Have a great weekend.